Well, it leaves us in chaos is the short answer, and you can see that in the markets already. In terms of the real world impact, it's going to take time for this to play out. And the way it's going to happen is you're going to see supply chains beginning to rejigger like dominoes falling. If you think about how many parts are imported, say for the average car, I mean it's hundreds, it could be thousands for some pieces of equipment, and as those pieces get imported, the retailers are going to have to decide who's going to pick up the cost. Are they going to try and push it on to suppliers? Are they going to take some of the pain themselves? Are they going to pass it on to consumers? And so, in different products, in different industries, in different parts of our lives, we're going to begin to see prices shift. It's interesting. You can see a lot of Americans actually responding to the threat of this by shopping, which
Right.
it would seem like an oxymoron, but actually it sort of makes sense. People are stocking up. They're thinking, let me go ahead and buy all those toothbrushes. Let me maybe make that car purchase. You're even seeing, certain retailers, automakers are not actually sending as many cars out for export. They're kind of hoarding supplies. So we're beginning to see the sorts of things you see at the beginning of a trade war, which is disruption to the status quo.
So stock futures did not react well to this Chinese announcement. They dropped about 1% the minute that China did announce the retaliation. And if the markets close today, and it's not clear that they will, that's not how futures work, but if they close, the S&P down more than a point at the end of the day, that would put us in a bear market, technically. That's stocks. But Rana, what I've heard overnight is more concerns about the bond market. The bond prices are dropping. I was excited to talk to you because I know you can explain in ways that silly people like me can understand why that's important and so concerning.
Well, first of all, I just want to say to all listeners, the simple questions are always the best questions. It's an interesting thing. Usually, when you see a kind of a stock market rout like what we're seeing now, you would see safety assets, things that people feel are more secure, like bonds, particularly short-term bonds, short-term U.S. Treasuries, gold, even things like that should be rising. But actually, in recent days, they've been falling. So why is that? Two things to think about. One is that a lot of players in the market, particularly big institutional players, hedge funds, the professional guys, are actually selling the good stuff, meaning, the safe bonds, the gold, in order to cover the losses that they're having in other places in their portfolio. That's something that worries me because that's the type of behavior that you see when there are more losses to come. It means there's blood on the floor somewhere. There are big places where there's debt that may be covered and we don't know where it is. And that just means that there's a lot of risk in the market still. Point number one. Point number two is that even before this trade war, the bond market was telling us, we're nervous about the US economy. We're nervous about the world. We know that there's a kind of a paradigm shift coming, and they were reflecting that. Yields were going up, which means you get paid more for taking the risk, but prices were going down. And that says the bond market was already thinking, even before the trade war, gosh, I'm worried about the US economy.
Yeah, it's a scary cocktail, the likes of which you see during COVID
Yeah,
or something. I mean, we haven't seen something like we're seeing
exactly.
overnight since COVID, which is why I think people are waking up going, whoa, this is getting even more tenuous.